guidance on these programs that we'll talk about today. So I know Michael's been excellent about sharing those, and we'll continue to put those out as we get additional guidance from the administration and from lenders across the country. So, just a caveat before I begin here, I'm going to run through the legislation, right? This phase 3 bill that was passed. Every circumstance is unique. And as I've talked with small businesses across the country, I've come to appreciate the unique circumstances of all these companies and all the businesses, right? So everything I take it holistically, but then make sure you talk with your CPA, talk with your lender about the particulars of your business, which program is going to make the most sense. Because there are a few different ones that do have some interplay that we'll talk about. I was talking with my father, who's a CEO of a small business, small technology company back home in Illinois. And I was walking through him some of these provisions, and, he even had some questions, right? And I generally consider him to be pretty sharp on this. So that being said, this is an evolving, exercise here. I was just looking at some of the most recent news about, this one of the programs we'll talk about, the big one, the Paycheck Protection Program, came online today for small businesses. It's not going as smoothly, I think, as most people hoped, but listen, it's a week-old program. It's $350 billion. There's going to be some challenges. So this will continue to evolve. So Mike, could we go to the first slide, please? So just an overview of the CARES Act. And this was the bill that was just recently signed into law. This is the third coronavirus bill that Congress has passed. It's the biggest to date. So when you think about it, it's $2.2 trillion. So this is the largest economic stimulus package our country has ever put together and passed. And we look at the timeline that Congress put this together, and it's pretty remarkable. And I think it really kind of speaks to the unique circumstances that we find ourselves in. And I would, about this phase 3, it's really a bridge. It's just designed to, prevent a prolonged recession and downturn. And really it's just about providing that, that filling that gap before, we can resume commerce as normal. There's already been discussions about a phase 4 bill that could look very similar to this, and we can talk about that a little later. So 2.2 trillion. There's also some additional programs that touch on the Federal Reserve that can ramp this up to about 4 trillion in support for the economy. I won't spend too much time on that, but happy to discuss that offline if folks want. So within the bill, this phase 3, this CARES Act, there was kind of 2 tranches, right? You have the individual support, and then you have the support for businesses. And, on the individual front, you can see there on the slide. So these are the direct payments. These are the checks from the Treasury that have been discussed. It's $1,200 per individual, $2,400 per joint return, and then $500 for each child. And this is phased out. So for the individual earner, after $75,000, it's phased out slowly. There's kind of a down ramp, and then for joint filers, it's $150,000. Another provision of this, kind of staying on this individual side for a moment, was unemployment insurance. And with the UI, the federal government is going to provide an additional $600 on top of the regular state benefit through July 31st. The only catch here is that states have to opt in to this for their residents to get the additional benefit. And this, just like regular UI, ends when folks can return to work, when they're called, when they're asked to come back. And we've had a few questions come up on this, right, about with this enhanced benefit, would folks stay on it? But as I just mentioned, once folks get that call, hey, we're reopening, if you're available to work and you choose not to work, then their eligibility ends. Michael, could you go to the next slide, please? So these are the major provisions of employers, and this is where we'll spend the bulk of our time today. We'll talk about those options that are available to all employers, including some of the tax changes in this employee retention credit, maybe some provisions for some mid and large size employers. These are loan guarantees, and those Federal Reserve credit facilities that I talked about. But where we'll spend the most time is on the small business part down here at the bottom. And this is for small businesses, the self-employed, independent contractors, and nonprofits. And that's where we'll talk about the big program, the Paycheck Protection Program that launched today, but also these EIDL loans, the SBA economic disaster loans. Next slide, please, Michael. All right, so first up here for all employers. The first is this payroll tax provision, right? So obviously, small business owners, you cut a check to the government, and then, part of it comes out for Social Security for your employees as well. And under the bill, under the CARES Act, employer can choose to delay the payment of the portion of this payroll taxes, right, this 6.2% Social Security wages, and they can start delaying that between now and January 1 of 2021. So if you choose to delay it, you have to pay 50% of the accumulated account that you would have owed, 50% on December 31st, 2021, and then the other half on December 31st, 2022. And there's an important caveat here. So this is generally available to all employers, except if you have a loan forgiven under the Paycheck Protection Program, which we'll talk about in a little, but just wanted to plant that seed there. Other tax changes that were included in the bill, I start talking about net operating losses, your NOLs. So, if you had a business that had an operating loss and you want to be able to use that against your prior taxes paid, now your NOLs can be expanded from 2018, 2019, and 2020. They can generally carry back about 5 years. This applies to pass-throughs and sole proprietors as well. And this starts to get into a conversation about AMT, alternative minimum tax credits, which I won't spend too much time talking about today. So as I mentioned kind of at the outset, all these are really centered around one idea, and that's improving liquidity for employers. Right? When folks don't have revenue coming in, you got to still have bills to pay in most cases. So these provisions are really looking at providing some additional liquidity. So it's not so much about reducing overall taxes as it is timing, right? Giving employers much needed access to the cash, today to be able to pay their employees, right? Keep folks on the payroll, which is really the guiding principle, the guiding initiative behind this phase 3 bill. Michael, go to the next slide, please. So another provision available to all employers here is this employee retention credit, and this hasn't received a whole lot of attention, or at least as much attention as some of the other provisions I'll talk to, because it was a late addition. It was not included in the original bill. So as a result, folks just haven't been focusing in about it. We put up a guide that I think Michael has shared, so please take a look at it. And this generally applies to all employers. So we're talking about businesses here, nonprofits, for example, who are partially shut down as a result of coronavirus, or have seen a 50% drop in their gross receipts in a quarter. They're eligible for this until their gross receipts get back up to 80% of prior year amounts. So this is really designed to help folks who've been shut down, lost revenue, but are continuing to pay their employees. So how much is this tax credit worth? It's 50% of the wages paid by the employer, up to $10,000 per employee. That's a fully refundable tax credit. So it should work out to be, if my math is correct, $5,000 available to the employer. But there are some rules here built in for companies of varying sizes. So if you have more than 100 employees, the benefit only applies to the employees who are paying but are not providing services. So if your business is shut down, for example, you've had that drop in revenue, your employee isn't working, they're not teleworking, they can't perform their service, but you continue to pay them, you can access this in the recognition of the fact that you paid them. If you have 100 employees or less, that requirement that they be providing services, i.e. teleworking, doesn't apply. It's available to all employees you pay during the eligible pay period. So this eligible pay period is when you're shut down, or when you have a quarter with that drop in gross receipts that I mentioned. Another interplay here, warning. So importantly, the interplay here with the Paycheck Protection Program is that if you receive one of these loans, Paycheck Protection, because it can be converted into a grant that we'll talk about later, you can't take advantage of the employee retention credits. This is why I always encourage folks to talk with their lenders and their CPAs and other folks about making sure that you're selecting the programs that work best for you. Let's go to the next slide, please, Michael. So mid-size and large employers, this includes, almost 450 billion from the Treasury to support loans, loan guarantees, and the Federal Reserve credit facilities, which I talked about. You may have been reading about them in the paper. These are things that the Federal Reserve are creating to support commercial paper, money market funds. They do these as a regular course of business when we have a financial crisis. They were certainly extensively used after 2008. And this is really, of the 500 billion, that 454 number is directly for business at large. And this is where, you start to see some provisions for the airline industry, that's been harmed, for the critical national security businesses that make up the remainder. We're still looking for some additional guidance on this. So I'm not going to talk a whole bunch about this provision, but happy to follow up with folks offline if they'd like. Michael, could you go to the next slide, please? Okay, so here's the small business, self-employed, independent contractor, nonprofit. And then this is really what's garnering the most attention these days. And the biggest part of this is the Paycheck Protection Program, which I mentioned for small businesses came online today in about a week. I believe it is exactly a week, the 10th. Yeah, sorry, I lost track of my days here. Then it comes online for other folks, independent contractors and the like. So it's 349 billion in loans for small businesses that are generally defined as employers with less than 500 employees, 501c3s, self-employed, sole proprietors, and independent contractors. And if you've been following the news today, or I'd love to hear from folks if they sought to take advantage of this today, what their experience has been. But we're seeing some interesting numbers on how many people have applied, how many loans have gone out the door, and then certainly how many lenders are participating in this program. And they made the terms very generous in an attempt to get as many lenders online as they can. And certainly the goal is to have someone apply in the morning and get relief in the evening. So they want this to move extremely fast, right? As I mentioned, the overarching objective of this is to keep people on payroll but provide that bridge. And really, when you think about this, and then what could come after this insofar as legislation, this is really a couple months that we're looking here with this bill, right? Because if we start talking about some of the other provisions and the time frames there, but then also some of the paid family leave provisions, for example, from the second coronavirus bill, it's clear that this was meant to be a immediate and short-term project. So on these the PPP loans, the way to think about this is if you're generally qualified for a SBA, Small Business Administration program, you're going to qualify under this program. And in addition to that, some employers, some businesses who previously didn't qualify have been added to the list. And these are your independent contractors and the self-employed. It also includes provisions that allow for restaurants and hotels to also partake. Who else would have otherwise been ineligible? Because think about franchises, if you add up all their employees, they have more than 500. So what this bill does is that it says that we're going to judge you on a per location basis. So don't automatically assume because you're not eligible in a regular SBA program that you wouldn't be eligible for the Paycheck Protection Program. The U.S. Chamber's got a great guide on this. Michael, I know you've shared it. Just let me reference it one more time. I think it's 4 pages. It has details on how you calculate who's eligible, what the forgiveness is. But generally, how much can you borrow? You can borrow up to 2.5 months of your average payroll expenses. And there's a formula to calculate this, as I mentioned. But once you calculate that, multiply it by 2.5, the loan can't exceed $10 million, right? And there's also restrictions on salary. So you can only count the first $100,000 of your employee salary, for example. So as I mentioned, where do you get this loan? You don't go to the SBA. You go to your local and your national lenders. And I know, I think it was Wells Fargo's online, Truist is online. I believe BOA, JP one of them was online, one of them was about to come online. Certainly we'll see additional lenders come online later in the week, but if you already have like a SBA Section 7A lender, they'll participate in this program. And I believe that Treasury and the SBA will continue to provide additional guidance to make sure that there's even more lenders that are available for this program. It is first come, first serve, which is something that someone pointed out to me. So when we think about how much money is in the pot right now, and then you have Congress talking about, well, are there going to be additional funds? And that's what the conversation is right now. So, if there were to be an exhaustion of these funds, is there going to be a replenishment? And that's what Congress is thinking through right now. So there's very minimal requirements for the underwriting of these loans. No collateral is required, no personal guarantee required. And that's a really unique feature because the loans can convert into grants based upon what the borrower spends the money on. So the way that the bill is laid out, if you look at 8 weeks of your expenses after the date of the origination of the loan, and you get to tally everything up that you would have spent on payroll, rent for your business, interest on mortgage, utilities, you can get dollar for dollar forgiveness on that loan. And of course, obviously the forgiveness can't exceed the total loan. There are some conditions though. Your loan forgiveness is reduced proportionally if you reduce the number of full-time employees that you had relative to the benchmark period, either the year before or the first 2 months of the year. And the loan forgiveness is also reduced if you reduce wages for employees. As I talked about that phase out, making less than 100, more than 25%. And that's, really what they were looking for, right? Because they really are trying to target this at middle income earners. Employers can also avoid a reduction in the forgiveness if they bring back employees and restore their wages, generally 30 days, after receiving the loan, and maintain those wages through June 30th of this year. We have been getting some questions about, well, what if the business is shut down, right? Or what happens if we're in an area where the governor said that, essential businesses can't open, non-essential businesses can't open. That doesn't really matter for this purpose, right? Because what they're looking at is, what did you do after you took the loan? Were you paying your employees? So that's something to take in mind. Can we go to the next slide, please, Michael?
Yeah, real quick, Kris, I had a question come in to me. If my bank doesn't show they are participating, how do we apply?
I would say continue to contact them. They may become eligible, right? As this program gets rolled out, but then you may have to look at a different lender. Unfortunately, I think would be my best guidance.
Okay, and then a follow-up question: if the loan amount is based on 2.5 times the payroll, how do we add in the lease amount and allow other allowable items?
So if you look at, and I'm just going to pull it up here on my screen. If you take a look at the guide that we put up here, it talks about this on page 4, at least about how the loan is forgiven, right? So it's the sum of the included payroll cost minus the excluded payroll cost, right? And that's how you generate your cost. But insofar as how much will be forgiven, there's, and I'm not a huge math guy, but there is a graphic here that explains it. And you've shared this document, correct, Michael?
I have. I'll resend it tonight to everybody as well.
Yeah, and then like I said, we're going to continue to update all of our resources, whether it's on this, the idle loans we'll talk about, obviously, because this is a very rapidly evolving project. This bill was signed into law a week ago. It's $350 billion just on this one provision, and it's something that I think there's going to be a lot of edges that have to be smoothed out here.
Okay, thank you.
So this is just what I was talking about. There's our guide, SB loans. We have a little graphic on each one of those. And then also certainly Small Business Administration, Treasury will also have resources as well as applications, which I know are continuing to be revamped. Go to the next slide, please, Michael. All right. Let's see. So SBA economic injury disaster loans, EIDL loans. You may be familiar with these if you've previously received one. These have been typically used after a hurricane, tornado, flood, something like that. And these still benefit small businesses, self-employed, independent contractors, nonprofits. So who's eligible? Small business, nonprofits, as I mentioned, also faith-based organizations. So there's really no restrictions on the type of nonprofit that can apply. If an entity that is a nonprofit that has fewer than 500 employees, again here, so proprietors and independent contractors count as well. So this is an actual loan that it does not convert. In general, does not convert to a grant. You can borrow up to $2 million in working capital that's repaid over 30 years. And the interest rate there, 3.75. Michael and I were talking about this. I believe that's generally accurate. Payroll protection is 1%. They actually just bumped that up. And that has a maturity date of 2 years on the program that we just talked about, payroll protection program. So if you take out this loan, payments are deferred for up to a year. So you don't have to immediately pay back, starting to pay those back. And they've made it easier for individual businesses to apply. So the loan's going to be based on the credit scores. You don't have to immediately produce tax returns. You can get up to $200,000 without a personal guarantee. And no collateral is required for $25,000 or less. Beyond that, there's general security interest. Sometimes it's secured to real estate, but they're trying to move away from real estate in this case. And so this is an important feature here of the new EIDL loan that was created by the CARES Act. So if you're applying for one of these EIDL loans, you can request an emergency grant up to $10,000. And the bill details what you may use those for. We have it on our guide. But generally, this grant does not have to, or sorry, this grant does not have to be repaid even if you're denied the loan. So if you apply for the loan, you request it, you get the emergency grant, you receive it, but then you're ultimately denied the loan, right? So if you get the emergency 10K, but you denied the loan, you don't have to pay it back. So this is really an emergency grant for small business. Once again, some important interactions here with the Paycheck Protection Program that we just talked about. So for example, if you end up with both, right? So let's say, you applied for an EIDL loan ahead of the Paycheck Protection Program. You can't get double forgiveness for that $10,000 that emergency grant that we just talked about, right? You can't take that $10,000 off of the Paycheck Protection Program's forgiveness. And there's also some provisions and requirements here to make sure that folks aren't double dipping. So if you're thinking about taking both of these out, you want to take a look at it. You want to take a look at the restrictions. And at the end of the day, what they've done, candidly, is made the Paycheck Protection Program the most favorable. And then they've tacked on other programs and then reduced some of the eligibility requirements for the EIDL loans that I just talked about. So for the EIDL loans, you don't go to your local bank. You don't go to a national lender for this. This is what you go through at SBA.gov, right? You go through the Small Business Administration. And this is the one that chambers and other 501c6s can apply for. And chambers, Michael, can also do the employee retention credit that we talked about earlier. Could you go to the next slide, please? So let me just cover a few other things, paid sick leave and then the FMLA provisions. So these are going back to the second coronavirus bill that was passed. So this was ahead of the most recent one. And this is some new provisions. So with respect to small businesses, we have gotten a lot of questions on this. This comes from what was called the Families First Act, which was the phase 2 coronavirus bill. So what was in there? So in the second phase bill, there was a requirement that employers with less than 500 employees provide paid sick leave. And that was 10 days of paid sick leave to their employees if it's related to the coronavirus. So this is if you contract COVID-19, if you're quarantined, if you need to take care of a family member who is quarantined, or if you're taking care of a kid because school or daycares have closed. And leave is paid at your regular rate, but it's for a maximum of $511 per day, unless you're taking care of a family member, and then it's at 2/3 of your regular rate for a maximum of $200 per day. Importantly, and very importantly, the federal government will reimburse the employer 100% of these costs up to the daily maximum that you pay your employees. And this comes in the form of a reformable tax credit. And understanding that businesses often have liquidity problems, certainly right now, Treasury Department is taking steps to allow folks to request an advance on this, who are taking this paid sick leave. And then this is in addition to A, what employers already provide, but B, applicable in state and local laws as well. And there has been, a lot of talk about businesses with fewer than 50 employees being exempt. And the law does provide that an employer may be exempt, but they can only be exempt with respect to the paid leave that's tied to caring for a child whose daycare or school is closed, and only to the extent that it is threatening the viability of the business here. So certainly if you think that this applies to you, if you're a small business owner or you're a business owner, whatever the case may be, certainly check out Department of Labor's guidelines on this, and they have additional guidance on this. And finally, paid sick leave is generally not available for folks who can telework. So, if you have an employee that is taking care of, a child whose daycare or school has closed and they can telework, for example, by staggering this hours, this is not applicable. Go to the next slide, please, Michael. All right, paid family leave. So this is also from the phase 2 coronavirus bill, and this is the Family Medical Leave Act. So the law generally allows for 12 weeks of unpaid leave. But what the phase 2 bill did is say that employers with less than 500 employees, they're required to provide up to 10 weeks of paid family leave if they need to take care of a child due to a school closure or the coronavirus. And that's the only reason, that only if they're taking care of a child for the purposes of that extended leave. So when you think about the interaction between this and the sick leave, an employee would be eligible to take 10 days of sick leave first, and then would be eligible for up to the 10 weeks of the paid leave. And here, once again, as you see on the slide there, it's paid at the 2/3 regular rate, maximum $200 per day, 10 grand in the aggregate. And this is in addition, once again, to what you already receive under state and local law. This is fully reimbursed the same way by the federal government. There are exemptions for employees with 50 or fewer employees, same as the paid sick leave. And it doesn't, once again, apply to folks that can telework. So if you've been keeping track of some of these numbers, we see, the 10 days, the 10 weeks, we talk about average payroll expenses, 2.5, months or something like that. You'll see that they don't align. I would hate to tell you that this isn't a result of Congress moving fast. So it's certainly something that I know people are already trying to figure out as well. How do these programs align if they have different timetables? And I think that's a discussion that will certainly need to be had, especially as Congress considers additional packages. Go to the final slide here, Michael. Just get more information. Obviously, chamber.com. Michael's been sending you all of our publications. You can also go to our co-website, where has all of our small business resources, uschamber.com/co. We're also doing additional national town halls for small businesses that are being broadcast. We had one at 12 o'clock today. So, please hit that up or contact me, anyone. We're always here to help. So, Michael, that's the end of my lovely slide deck. So I'm happy to try and take any questions that I can.
Okay, so folks, if you have any questions, just type them in the chat there, and you can type them to everybody. I did get a couple that were sent to me privately, but you can just type them to everybody. One other question that I already have received, Kris, is and I think this was a question back right when we finished up the payroll protections slide. What if you only have part-time employees and no full-time employees? Does it still apply?
That's a good question. I believe it's only for the full-time equivalents. I'm gonna double check on that though, Michael, and I'll get back to you on that one.
Okay. All right. Well, when you get that back to me, then I will share that information with everybody. And then can you go over the list of lenders again?
So the lender, if you have a lender that's already a SBA Section 7A lender, they qualify. And then certainly your national lenders, JP Morgan Chase, Wells Fargo, BOA, folks like that. But really, what the congressional intent was, and what Treasury and Small Business Administration have indicated, is they want every lender possible to be part of this program. And I think just looking over Secretary Mnuchin's most recent comments, I think the vast majority of applications today came from community banks. So certainly if you have someone that you work with in the past and you trust, contact them, see what their status is, see if they have a plan to come online, if they have a plan to start doing this, originating these loans. Otherwise, you might have to contact other folks in the area.
Okay. Anybody else have any questions? I'm not seeing any come in. We did record this. I hope that was all right, Kris. I'll be sending out when I send out my email later this afternoon, I will include a link to the recording for those of you who may have joined late or who just want to review this. And I will also send out the PowerPoint in that email as well. And I will include again the graphics that Kris was alluding to.
Yeah, please take a look at those graphics, because like I was talking about when I speak with my dad, who's works for a small business. He noticed a significant delta between what was on the application, what the early guidance was from the SBA, and what we had put out, right? Because we went through the law and we looked through it, and that's how we were able to create our graphics. Which I'm extremely proud of. They actually, not to brag here, but they made their way onto Good Morning America, of all places. Just a tremendous shout out to my colleagues that do this work full time for what they've been able to provide. And certainly, like I said, we're here to answer any additional questions.
All right. Well, I don't see any other questions coming in, Kris. So again, thank everybody for joining. Kris, thank you for taking time out of your schedule. I know you're as busy, crazy busy as all the rest of us are. So
absolutely my pleasure. Laura, thank you. Stay healthy yourself as well. We'll get through this, better days ahead. But please, start to think about these programs. Think about what makes the most sense for your business, and talk with your lenders, talk with your CP, whoever, because this is going to be a widely sought after program, especially as additional lenders come online, as the applications are processed. And, like I said, the intent of Congress, the intent of the administration was to get these dollars out the door as fast as possible, provide that bridge. And then we'll talk about what the next phase is. We'll talk about, what a couple months down the road looks like. But right now, please take a look at these programs.
All right. Thank you.
All right, guys. Thank you. Everyone stay well.
All right. You too. Bye-bye, everybody.